In terms of cryptocurrency adoption, Ghana is catching up to Kenya and Nigeria. Welcome to CryptoLink channel. If you love getting news and updates about cryptocurrency, join our community by subscribing to our channel. You can tap the bell icon to never miss our new videos. If you enjoy our channel, kindly like and share it with your friends. September 30th, 2022. Cointelegraph tweeted, Ghana is on its way to greatness. The West African country has the potential to become the leader in terms of crypto adoption, according to the CEO of Paxful. Ghana, a country in West Africa, could quickly catch up to other African nations in terms of cryptocurrency use as developing economies take the lead in the industry. Researchers discovered that Ghana has the potential to reach cryptocurrency adoption levels comparable to Kenya and Nigeria, the nations that rated 11th and 19th in the analytics company's Global Crypto Adoption Index, in a study issued by blockchain analytics platform Chainalysis. The requirements of the local people and the country's present growth patterns, in peer-to-peer or P2P platform Paxful CEO, Ray Yusuf's opinion, demonstrate Ghana's capability to emerge as a leader in the adoption of cryptocurrencies in Africa. In the past 2 years, according to Yusuf, the overall trade volume from Ghana on their P2P exchange has increased by 400%. The executive thinks that many Nigerians regard Ghana to be their summer home and are teaching Ghanaians about Bitcoin and cryptocurrencies. Chainalysis said that the information offered by Yusuf is consistent with their research on Ghana. The analytics company noted that other sub-Saharan African nations, including Ghana, are anticipated to have higher levels of cryptocurrency adoption as many of its citizens continue to confront problems that may be resolved by crypto. The Bank of Ghana is testing and planning for a central bank digital currency, or CBDC, according to Kwame Apong, Bank of Ghana's executive, who spoke with Cointelegraph recently at the Africa Money and DeFi Summit. Apong claims that they are working to establish a CBDC in order to promote financial inclusion across the nation. The executive thinks that because crypto has so many strengths, it has a lot of potential. October 1, 2022. According to a tweet from the block. Solana back online following latest network outage. The downtime that Solana experienced on Friday night as a result of a misconfigured node that prevented the blockchain from completing transactions has been resolved. A validator looked to be running 2 instances of the validator, resulting in the validator creating 2 blocks instead of 1. Stakewiz, a software and blockchain firm that runs a validator node on Solana, stated in a Twitter thread, not an issue in itself and something the network should handle. As a result of the disagreement over which version was accurate, the blockchain forked. Validators were unable to return to the main fork as a result of this fork's convoluted code path. Stakewiz hypothesized that the Solana network's inability to resolve the issue may be related to a flawed node failover arrangement. The choice was taken to reboot the network at the most recent verified timeslot, 1531392220. At 7 a.m. Universal Time Coordinated, the restart was finished. Solana has had many outages over the past year, despite its claims to be a high-performance blockchain. It lost connectivity for over 18 hours in September 2021. It also had a 7-hour period of freezing in the beginning of May before validators began, as well as a 4-hour outage in June. In the months of January, March, April, and May, the network's performance declined. September 30th, 2022. Another tweet from Cointelegraph stated, United States Treasury yields are soaring as investors seek shelter from high inflation. Adnashit Coins explains what's behind the phenomena and how it could impact cryptocurrencies. Bonds issued by the U.S. government, known as U.S. Treasuries, have a huge impact on all tradable marketplaces and currencies. Any measurement of risk in finance is relative. Therefore, if a house is insured, the maximum responsibility will be determined in some monetary form. Similar to this, if a bank loan is obtained, the creditor must assess the probability that the money won't be returned as well as the risk that the amount would depreciate due to inflation. Let's say that the United States government temporarily stopped making payments to particular regions or nations. What would this mean for the costs related to issuing debt? A number of institutions and governments rely on the $7.6 trillion in bonds that are now owned by foreign organizations. There would be more damage in the credit markets as a result of participants scrambling to lower risk exposure due to the possible cascade effect from nations and financial institutions that would instantly affect their capacity to settle exports and imports. Investors typically believe that a government-backed loan title has the least risk in existence because the general public holds over $24 trillion U.S. Treasury securities. Yield of Treasury is nominal. Be cautious of inflation. Professional investors do not trade at the yield that is frequently discussed in the media since each bond has a different price. However, traders may determine the comparable yearly return depending on the maturity contract, making it simpler for the public to comprehend the advantages of owning bonds. Purchasing United States 10-year Treasury at 90, for instance, offers the owner an equal 4% interest up to the contract's maturity. Investors have a propensity to seek a higher yield while trading the 10-year bond if they believe that inflation won't be kept under control anytime soon. On the other hand, if investors believe that foreign countries are in risk of going bankrupt or of hyperinflating their currencies, it is likely that they will turn to U.S. Treasury bonds for safety. U.S. government bonds may trade at a discount to rival assets and even outperform anticipated inflation thanks to a careful equilibrium. After central banks lowered interest rates to zero to support their markets in 2020 and 2021, negative yields, which were unthinkable a few years ago, became rather prevalent. Investors pay for the benefit of having government-backed bonds security rather than having to deal with the volatility of bank deposits. Despite how absurd that may seem, there are still negative yield bonds worth over $2.5 trillion, and that doesn't account for inflation. Inflation pricing on regular bonds is higher. One must be aware that the 3-year notes yield is currently 4.38% to comprehend how far from truth U.S. government bond seems to have become. Consumer inflation is at 8.3%, so investors are either ready to give up buying power in return for the asset with the lowest possible risk in the world, or they believe the Federal Reserve will effectively lower the metric. The U.S. has never experienced a debt default in modern history. The debt ceiling is essentially a boundary that one sets for oneself. Therefore, the amount of debt that the federal government may issue is decided by Congress. In comparison, the current yield on an August 2025 maturity bond from HSBC Holdings is 5.9%. In essence, it is not a good idea to use U.S. Treasury rates as a trustworthy indicator of inflation expectations. Furthermore, the fact that it climbed to its greatest level since 2008 is of little consequence given that data indicates investors are prepared to forego returns in exchange for the security of owning the asset with the lowest risk. Therefore, although not in absolute terms, U.S. Treasury returns are an excellent tool to compare to corporate bonds and other nations' bonds. Inflation expectations will be reflected in those government bonds, but they may also be severely limited if the overall risk posed by other issuers rises. That's it for our today's video. So, what can you say about the news? Let us know about it in the comments section down below. Thanks for tuning in to CryptoLink. We are always excited to provide you with news and updates about cryptocurrency, and if you like this video, please click the like button. See you on the next one.